And good afternoon. Welcome into Market Talk here for Tuesday, March 2nd, 2021. A good afternoon to you. I'm your host, Jesse Allen. Great to have you here with us. MarketTalkAg.com, our home on the web, MarketTalkAg.com. Find us on Facebook, Twitter, Instagram, all at Market Talk Ag. You can find a list of our streaming sources on our website, our great radio affiliates there as well. Again, that's all at MarketTalkAg.com. Well, we saw a nice rally in the grain markets here on Tuesday and a lot to talk about. Let's bring in our guest today, Brian Splitt with agmarket.net. Brian, good afternoon to you, sir. How are you?
Doing well, Jesse. Thanks for having me.
Appreciate you joining us here this week, Brian. And looking at this grain market, more volatility coming in here and a nice rally for farmers to take a look at, maybe doing some selling off of here today. Really strong closes in corn, soybeans, and wheat today, Brian.
We did have good closes, opposite of what we saw during the night session and what we woke up to this morning. And once again, the soybean market, retested support, held it, rallied off of it. We've got a pattern week after week after week. We come out of the weekend, we open up very strong, gap higher, fill that gap during the day on Monday, trade a little bit lower than that into Tuesday morning, and then start to recover. And in the case of last week, we made new contract highs towards the end of the week. So we'll see how things progress this week. We still have concerns about the heat in Argentina. It looks like they probably won't get much more rain until mid-month, so that should be supportive. Areas of Brazil are still very wet, which is hampering harvest and delaying the safrinha corn planting. So that's still something that's going to underpin the market. One of the features today that I thought was really exciting was what March corn was doing relative to May and July. And, we are seeing March corn trading at some really strong premiums to May and July while in delivery. And I think that is an indicator that the market is really searching for corn. The longs that are still long futures want delivery if they can't source it in the physical cash market. And that is forcing the spreads to trade strong. And as we taper down our soybean shipment program and move into spring, it's going to be corn that we're shipping. And so the market is going to continue to have to do this with spreads and with basis to get physical corn into the export channel and on a boat.
Well, let's stay on that topic a little bit here. And if I'm a producer who's still hanging on to some old crop corn bushels here at this point, I know there's not many, but it would seem like now's a good time possibly to maybe move some of that corn, because you just alluded to it. We're looking for corn at this point.
Right. And so I suppose the question is, if you haven't sold it yet, why would you sell it right now? And so I think the producer that does still have physical bushels in their control, they're probably waiting until we get closer to the summer weather market. I was just looking at a map of some of the year-over-year production, areas in the country that produced more corn than last year, areas in the country that produced less corn than last year. And Iowa is going to be a really interesting story as we get into summertime, because we had severe reductions in production year over year throughout most of the state. So basis could be really strong in Iowa as we get towards the back end of this crop year. So I think the producer that still has physical bushels has weathered a lot of the storm and probably says, hey, as long as corn is trading above a certain price, I'm just going to let it go and see what happens. And I don't know that I disagree with that at this point.
I want to talk a little bit on the new crop side. Strong closes there today as well in corn and beans, and looking out even in wheat futures as well. We saw a lot of double-digit closes on the board, but on the corn side first, December corn, 475, 3/4 on that futures side. And you talk about basis and strengthening basis here as we go through the next couple of months. But even so, at this point, would it be smart to lock a floor underneath you, whether you're looking at new crop corn, new crop beans here, Brian?
So I think the conversation that a producer needs to have internally right now is in conjunction with their crop insurance. And so depending on where you are geographically and what type of crop insurance product you're going to be using, I know a lot of the producers that we're working with are looking at 85% on their crop insurance, which means that there's 15% of their APH bushels have nothing against it. And so that would be, I think, where the producer would want to focus in the short term, is looking at those bushels above and beyond what is protected by their crop insurance. So that would be that 15%, and maybe some of the overage bushels that you will probably grow above your APH. You might want to look at those bushels as well. But until we really start to see new elevations and distance ourselves from the spring averages, I'm going to try to be patient on that other 85%. And then what might happen, and let's say corn, new crop goes to 550, for example, in the account, we may just want to use options to protect ourselves from whatever point down to 460 being 459 being the spring average. Because if we do see weakness down the road and we're below 459, we can make the difference in the hedge account from wherever we want to protect it down to that level, and then let the insurance product take over from there. So we only need to hedge a portion of the move and then let crop insurance take over from there. But again, I'm waiting for higher elevations until we have those conversations.
Now, I know as well next week we have a WASDE report coming out here for the month of March, and a lot of folks seem to think that we just kind of kicked the can down the road on quite a few numbers last month in quartered soybeans. What are some of the early thoughts you have on that WASDE report now that we are a week out from those March numbers, Brian?
Well, I know the USDA did make some adjustments in the right direction on soybeans on the last report. Our ending stocks are very tight on paper right now, and we are still looking for ending stocks to drop as we get towards the back end of the marketing year. And honestly, if we see some cancellations from some of the purchases that have already been made, that'll likely just mean that we'll import less down the road. So I don't know that unless we see some mass cancellations on very high bushel amounts, I don't know that that's really going to impact the balance sheet in the long run here. So we think we still have evidence based on the shipments of soybeans that the export number could be inched higher. Whether the USDA does that or not, good question. We are getting into a quarterly stock report at the end of the month with the acreage intentions. So knowing that, they may kick the can and wait to see how the stock numbers come out, and then use the April WASDE report to rectify those numbers would be my personal guess. On the corn side of things, we still are looking at an export program in front of us that I think is going to be very strong. And we still believe internally at agmarket.net that we're going to see additional export demand into the balance sheets, and still looking for some tighter numbers as we get closer to the end of the marketing year. So right now we're thinking closer to 1.3 billion bushels, down from the 1.5-ish that we're at right now. And again, that is going to assume that we see a strong export program through spring, and part of that will be because of potential losses in South America. In 2016, we had the safrinha corn crop in Brazil underperformed, and because of that, we had a very strong export program through the remainder of the marketing year. So,
well, overall, Brian, with all these reports coming up and all the volatility we continue to see in our grain markets, what advice would you give to producers right now as they're gearing up for spring planting? And obviously, they're going to be turning their attention to putting the crop in the ground here, but they also got to keep an eye on their marketing and what they're doing there. What advice would you give to any producers right now for the next couple of weeks ahead?
well, for the next few weeks ahead, in other years, we've seen instances where the crop goes in the ground quickly, especially if there is a projection from the USDA of a large amount of acres. If we have good planting conditions, the market may take a break. And so, knowing that you're going to be very busy while you're planting, in order to have maybe some peace of mind, you might consider looking at some short-dated puts under the market. They have puts that are priced off of new crop contracts, but that expire every month. So if you wanted to have something under the market on maybe that 15% or 20% that your crop insurance doesn't have coverage on, you might look at some of those short-dated puts and protect some of those bushels as we go through the planting time frame. But I do think that this is one of those years where if the crop goes in the ground very quickly because we stay dry during spring, To me, that's going to be setting up for fireworks as we get into summer, into the growing season, because that's going to mean that we really aren't recharging the subsoil moisture. And vice versa, you think about other years where maybe we rally in spring because we're planting late. Generally, those rallies are selling opportunities because we are going into the growing season with adequate subsoil moisture. So I do think if we do see some weakness in the short term during planting, that it's probably in the very big picture a buying opportunity. But I know it can be stressful watching prices go down while you're out there getting the crop in the ground. And so that might be something to help ease some of those fears in the meantime.
Brian, let's switch our conversation to livestock here on today's edition of the show. And lean hogs had a pretty rough day in that hog market, and a lot of folks wondering if this is finally the correction. Now, I know we saw this last week. We saw weakness, and we came back into the market, Monday specifically with a really strong day. What are your thoughts on this hog market? Do you think we finally reached our top, or is this just a minor correction to this market?
I don't know. We haven't done anything technically yet that says we've topped. We've obviously come off the highs and somewhat aggressively, but we have not taken out support yet. I do think that part of this is some money being moved around within the livestock complex. So we've seen obviously the lean hog market has been very strong as of late. We just made new contract highs in April lean hogs, 4 sessions ago. And so now we've seen the live cattle market, the feeder cattle market under pressure for a little while. April live cattle came down and hit some major support today, came off of that support to turn around and finish higher and off those lows. We had some of the feeder cattle contracts hit the longer term uptrend lines from the October lows that were made. So to me, this might just be some money moving out of the lean hogs and into the live cattle again. One is overperformed, one is underperformed, so it does make sense to see some profit taking in hogs and move into the cattle market. I do think that protein is still going to be something that the fund managers are looking at in a environment right now that is supportive to commodities as a whole. And so, we're still kind of keeping an eye on these pork prices in China. That does lead us to believe that things should be supportive. And we also have a positive basis right now in the cash hog market. So that might make this little pullback look like a buying opportunity as well.
Well, and you mentioned on the cattle side, maybe moving some money over there. And I'm very curious to watch in cattle this week if we develop any activity in feedlot country. It just seems that we have a lot of cattle that have been backed up from all that winter weather, and yet we still haven't been able to really drive a market here the last couple of weeks. It's just been kind of a dead market, it seems, with not a lot of activity happening, and we just can't seem to match up on a final price in feedlot country, Brian.
Right, and so how does that resolve itself? And I think at some point here, again, I'm going to be looking at the futures market and holding support. And we had the cutouts today were negative. We took that, we hit support and turned around and finished positive on bad news. So I look at the futures market telling us that maybe we've priced in some of the negativity here short term. I still think that over the long run, as we get closer to summertime, we're looking at the overall environment is going to be looking at opening up more. And so I was reading an article that a lot of these summer festivals are already being sold out as the UK plans to have an opening, a plan to open up as we get into summertime. People are itching to get out and to do things and to spend money. And I think that's going to mean good things for the overall economy and the beef market as we move forward over the next few months.
Brian, are you seeing any outside macro factors that are influencing our grain and livestock markets? I know we had a huge up day in the stock market yesterday. The Dow Jones, the Nasdaq, S&P, all higher today. We're trading at a little bit lower, pretty quiet trading day. Anything on the outside macro markets that are kind of playing into grains and livestock right now that you see?
Yeah, I think it's playing in a huge way in the last few sessions. When you think about what happened as we finished up the month of February, the last trading day of the month, we had the dollar index up sharply, and we had a lot of the outside markets along with the grains under pressure on Friday. Sunday night, we come out, not only did the grains open sharply higher, but a lot of the outside markets, energies were up strong, precious metals were strong. And what happens? The dollar firms up, everything comes off the highs. And then today we have the dollar index start strong, all the commodities are weak. And then over the course of the day, the dollar index pulls back, precious metals rally off the lows, grains rally off the lows. So I really do think that there is a mechanism in the market right now that is trying to figure out if this is the right time to make this inflationary play in commodities. And there is definitely a correlation, at least in the last 2 to 3 sessions, where we've seen a lot of the commodity values move inversely to the dollar. So that's definitely something we want to keep an eye on here.
Brian, great thoughts as always. Any other final thoughts here on this Tuesday for our producers listening in out there? Anything they need to keep an eye on, or anything they need to do with their marketing plans right now, you think?
Well, that's a very open-ended question, and I could probably answer that in a lot of different ways here. But my advice to them is that if they feel like they need help, they should contact somebody, whether it's one of us at Ag Market or somebody out there, just somebody to talk to, run ideas by. Have maybe establish a peer group with some other like-minded individuals that maybe aren't in your area directly, but somebody you can meet with once a quarter or twice a year, something like that, just to have a little bit of somebody to bounce things off of that you can share farming and marketing practices with. I think that has gone a long way in helping some of the individuals that I work with.
Well, I know you mentioned you and the team at agmarket.net. You guys have a lot of great resources, your website, your app on iPhone and Android, and a lot of great folks on the team there that can help people out if they need a little marketing advice, and they can just reach out to you guys or download your app, can't they?
That's right. You can reach us directly, anybody on the team, at 844-4AG-MARKET. So that's 844-424-6758. Online, www.agmarket.net. You can get a 2-week trial of the app at agmarket.app. So yeah, we've got a lot of resources to help you out. We're here for you.
Well, Brian, I appreciate the time as always. Thank you for joining us here on Market Talk today, and we'll talk to you again soon. Thanks so much.
Thank you, Jesse. Appreciate it.
Brian Splitt with agmarket.net, our guest here today on Market Talk for this Tuesday, March 2nd. Find us online, markettalkag.com. And I'm your host, Jesse Allen, wishing you a great afternoon.